Hello, children of the universe. Michael Parekh. We are Trends with Friends. We've got football season starting. We know that because JC is wearing 1960. How did you keep it so nice? That's a retro Miami Dolphins hat.
I'm OG, Lindzon. I'm OG.
I'm OG. Just an old OG stock to its hat. And what
I
is
know.
that
In
shirt?
Canada, don't they do it? They do hockey in Canada. In Miami, we do football and baseball.
In Canada, we do football. It's just every team has the same name. Just because we're socialists, we don't want to hurt anybody's feelings. Everybody's name is the Rough Riders.
Shout out to the
Canada.
Saskatchewan Roughriders, my favorite Canadian Football League team.
That's the Ottawa Rough Riders and the Saskatchewan Rough Riders, and soon to be Toronto Hamas, Toronto Hezbollah, I think, based on the anti-Semitism going up there. All right, Phil Pearlman from his basement, wearing a loose-fitting Ravens.
Representing,
yes.
baby. Come on.
Yes.
Lamar
I
and the
prefer you to
Ravens.
be wearing, representing Baltimore would be more like wearing something from The Wire. But you go ahead with your little football shirt.
Go Steelers.
You're a Steeler fan, Michael?
My wife, Pennsylvania.
Good for her. Well, you are live on Trends with Friends. We are live on the Twitter. So turn off your phones, everybody, if you want to listen. We are live on the YouTube. And as always, we have JC Parets. Doesn't matter what his hair looks like. Probably, do you gel it even when you wear a cap? It looks great.
Only for
Looks
you,
great.
Howard.
I got a haircut.
Only for you, baby.
I got a haircut.
Super Bowl's in New Orleans this year, as it should be every year. So I will be there rooting for Miami.
Mm-hmm. Well, they do well in the water in case there is flooding.
What's the difference?
Dolphins.
They got swamps in Florida, swamps in Louisiana. It's all good. It's just home.
And Phil from New York, JC's and somewhere in Pennsylvania. Michael, are you in Houston? Are you back from San Francisco?
Houston.
I am in Coronado.
Home of NASA.
You are joining us today to talk Trends with Friends. We've got a great last week we did the live Nvidia show, so we'll follow back up on, it's trading down since earnings. Michael will update us there. But Phil, take it away. We've got a lot of stuff to talk about. Stocktoberfest is coming up October 20th to 22nd. If you go to the website stocktoberfest.stocktwits.com, you will see the full schedule. JC's got Steve Stra. He's got his whole team. We're not going to do a Trends with Friends show because we don't need to. Instead, everybody will be performing separately. JC with his team, Michael with the fireside chat and a lot of questions, and Phil talking about living past 60. I think that's your topic, which is really a topic just for me because I'll be 59 by then, and you're trying to just get me past 60.
I will be sharing a way to get better at trading and market participation that nobody's talking about, nobody knows about, and that is easy to implement.
Oh, I like that. I invited Chris Peruna too because he's got some interesting. I don't know. Do you guys know Chris? Have you ever met Chris Peruna?
Love Peruna.
I'm a fan.
Haven't seen him forever.
I'm a fan. Haven't seen him forever, so I invited him. I don't know if it's me. Your mic not be on, but maybe that's just me, Phil. Is everybody here, Phil? Well,
yeah, he's good.
Okay, so we got Stocktoberfest. We have the post Nvidia doldrums. We've got September, October, historically the worst few months of the year. Again, tiny divergences in September, October. So Phil, walk us through what we see.
Let's start. So September, we got a whole bunch of monthly charts too. We got a Trends with No Friends. We're back. We will revisit Nvidia, but we're going to start with this September. Everybody's talking about it this morning. JC wrote about it already. Peruna's going to weigh in on it. Let's take a look at that S&P 500 election cycle versus current S&P 500 chart to start things off. What's going on with this, JC? What do we need to know?
I mean, this is just seasonally a weak time going into the election. I mean, we've seen it before. Just traditionally, I like to look at seasonality after the fact, like that the market ignores seasonal trends or that the market respect them. It's really all it is. So if the market during a seasonally weak period has been strong, which, by the way, that whole sell in May and go away thing, S&Ps are up double digits since then. So, strength in a seasonally weak period to me stands out. You saw it before the Trump election. Remember, they're all like, oh my God, if Trump gets elected, the market's going to crash, volatility is going to spike. As it turns out, it was the exact opposite. It was one of the greatest 12 months in the history of the stock market, one of the least volatile periods of all time. But you saw that prior to the election because you saw strength in equities, in small caps during a seasonally weak period. So that's how I look at it, more so than, just sell everything, market's going to crash, election, whatever. And if you go to the next chart, I think that this is a big one because you've got a third of the S&P 500 is technology. And when you look at technology on a relative basis, so this is tech relative to the S&P 500, we are now back to the dot-com bubble highs. Like we are back there now. We've been there for 6 weeks, have not made any progress, just kind of seen this as a mess. So as an observer of markets, when I see something like this, the question is very simple. How long is this resistance going to last? We know it's there. The market's obviously observed that. We've seen that tech underperformance as other areas have carried the market. But how long is it going to take? Is it going to be months? Is it going to be quarters? Is it going to be years? I have no idea. But I will tell you that semiconductors relative to the S&P 500 have already exceeded those dot-com bubble highs. So if you look to semiconductors as a leading indicator, which I like to do, and that's historically been a good idea to do, which is why we pay attention to semis. Semis have already exceeded that, which leads me to believe technology ultimately will do the same. How long is it going to take? That's the big question here for me going into September.
Do we need tech to continue the bull market? I mean, is that like a mandatory thing? I mean,
listen. The S&P 500 on an equally weighted basis is making new all-time highs. Healthcare is making new all-time highs. Materials just closed at an all-time high. Industrials keep making new all-time highs on an equally weighted basis and on a market cap weighted basis. So it's very broad in terms of what we're seeing. Now, can technology just absolutely start crashing from here and expect the S&P 500 to go higher? Probably not. So, some underperformance from technology, some spotty big winners versus just everything go up sort of situation. I think in a scenario like that, the stock market can continue to progress. It's just how bad is the disaster in technology is really all it is. So far, it hasn't been that bad, and the stock market's doing great, right?
And so we look. So here's one of Paruna's charts and this one is sort of pulling the election cycle out of it, just to look at an even sort of more basic trend in the NASDAQ, just to continue with the sort of I mean, it's not, it's not really a technology index, but technology-centric index. That September and October tend to be 4 months every year, not just election years. Is that right, JC?
Yeah, I mean, listen, we've had good Septembers, we've had good Octobers, we've had really bad Septembers, really bad Octobers. If you X out like 1987 and great financial crisis, the numbers aren't as bad. So, listen, we're all adults here. You can make the data say whatever you want it to say. At the end of the day, I'm more interested in how the market behaves during what is supposed to be a seasonally weak period rather than making investment decisions based on the fact that historically these have been a weak couple of months. I'm more interested in, where's the relative strength? Where's the relative weakness? Where do we want to own things? Correlations are, so low right now because we're so among stocks, because we're so far into this bull market. We're over 2 years into this bull market. When shit hits the fan, that's when correlations spike to 1. These correlations are next to nothing. So what you're seeing is a lot of names do very well in a market environment that isn't progressing. You're seeing names doing very poorly in an environment, in a market environment that's very steady. I think you're going to keep seeing that. I think you're going to see big winners and big losers. That's okay.
Yeah. I think I'll chime in and I'll let Mike go here. And I'm going to go with JC just on the price action. It's fine, right? So I think the key thing here is knowing back to school, back to work, the monotony of change of seasons. If you had your summer, it's never fun to go back and seasons change. I'd like September. I was born in September. I mean, September is a great month. Toronto, growing up as a kid, it was a cool month, hockey season. So as a kid, I like school. So I'm saying, I don't know, but the overall mood, mood matters, and generally it's a moody bitch month, September, October, because seasons change, back to school, throw in the election, throw in social media to amplify what was generally a bad season anyways, overall, right? Just talking about if you look at the markets. Okay. So knowing that, you have to do what JC says and say, what's more important here is knowing all that, how did the markets actually perform? So, use September and October to watch. You don't have to do much, but coming out of September, October, if you just do nothing, you'll be able to know a lot more just by seeing how the market reacted through a typical week, couple of months, right? And that'll tell you more than the actual market moving itself. So,
and one more thing, Howard,
yeah.
on your note. If the market were to have a severe decline in September and into October, let's just remember the old adage from our friend Jeff Hirsch, Mr. Pearlman, it's buy in October and get yourself sober, right? So keep that in mind. That's coming up too. So if there were to be a decline, that is historically a great opportunity to be buying stocks.
So
you saw it last year. You saw it the year before that also.
Yeah. So if you see a good September, October, you keep an eye on what really is doing well, because when the markets generally turn November, those should be leaders. If we see a weak September, October, write it down now. Just earmark some capital for the end of month, this month, and the end of that month, and blindly, as I call, freck it, or pick your favorite index. So use these data points not to change your mood, but to put yourself into the proper mood to make the right decisions if history repeats, right? If the markets and history repeats and we have 2 bad months, that's fantastic. If you decide to sit these 2 months out and wait, and the markets don't get killed, make sure you're following what the leaders are, because November on are generally good months. So again, you don't have to do anything. Now let's dive a little bit into the weeds, Phil, if it's okay. But when you still have some things really happening, which is, coffee exploded, gold, capex, like gold's working. It feels like crypto isn't, but JC can dive deeper into that, and it feels really heavy. I'm getting my statements from some funds that I'm in, and they're all having horrific, couple months, double-digit losses. So all's not great there. And you have to talk about AI, because as much as spending may be coming into commodities, and when does it stop getting spent? When do we see a glut, right, of both? Mike's shaking his head. So let's go right to that. Like, what could go wrong here with Nvidia and with semiconductors, right? Like, I mean, it feels like all the news is out, Michael. So what can go right and wrong here?
We are the opposite of glut. We are the opposite of glut. I love JC's slide on the semis beating the 2000 highs. And we're just focused on, obviously, the whole semi index. I'm just spending a lot of time on the next bottleneck beyond chips, the GPU chips, etc. Memory is the other big issue. These models are going to need more memory than we can conceive of. So there's both on the data center side and in terms of local devices on your computers and your smartphones. Apple next week kicks off September 9, the new iPhone refresh. So that's a big one. It's going to be chock full of AI chips, lots more memory. Google already announced their Pixel phones a couple of weeks ago. The whole industry is totally focused on just chips, every kind of chips. And it's not just the GPUs and the memory, it's data centers. And Nvidia is going to be ramping up, obviously, Blackwell, which Jensen mentioned several times on the call. They're going to have Blackwell in billions of dollars of volume in the fourth quarter, which, by the way, is the next 3-4 months. So, bleeding into, because they ended in first quarter of 25. And then next year is a massive year for Blackwell chips, etc. The industry, the big Mag 7 are talking about gigawatt data centers. That's a lot of buzzwords. Today's data centers 50, 100 megawatts. We're talking about 5x, 10x bigger from a power consumption point of view. Why is that important? The cost of a data center, which are already running into $500 million to $1 billion, 30, 40, 50% of that is power. Another 30, 40% of the stuff that goes in there, besides the GPUs, are the memory chips. So there is no glut for the next couple of years. We're going to see the next iteration of the large language models sometime. Either we'll get a peak of it by the end of this year. If OpenAI is correct in its signaling, it may bleed into early next year. But when we see it, we're going to get, I think, another gasp moment on, oh my God, this AI stuff is really magical. It won't be all stuff we can use immediately in our daily lives, because all of that has to be productized, but we will see what is possible. Just like we saw a couple of years ago with ChatGPT and said, oh, the world is changing, etc. And I agree with the group. Look, the fourth calendar quarter is doldrums. The September market reactions that you talked about, that chart is great. And then on the non-financial side, obviously October surprise. We got so many things going on the political front, the elections. Globally, you've got stuff in the Middle East, stuff in Europe, Ukraine. Everyone's on their back heels. China has a glut of capacity and a weak consumer, so they're freaking out on that front. So there's all kinds of things that can go wrong short term, but keep an eye on the long term. Technology, there's a lot of work to do, and all the companies are spending money and building things at a pace that I have not seen in 25 years. And so there's I think a good payoff soon, but it's not in weeks and months. It's in a year to 2 years.
I listened to, Phil, I don't know if you saw this. I listened to Schwartz's Stanford speech. What's his name? Google's Eric Schmidt.
Eric Schmidt.
Fuck. Yeah. Schwartz, Schmidt.
Goldberg,
Hassenpfeffer,
iceberg, it's
operator.
all the same. Remember that one?
So, yeah, Eric Schmidt really. Have you met him, Michael?
I've known Eric from the Sun Micro days when he was CEO.
Fascinated.
I've known him for a very long time.
Such a good speaker. I mean, forgetting all the personal stories my wife reads about him, the drama in his personal life, like his gravitas is fantastic. He's super bullish. His gravitas is fantastic. He's been on AI Task Force, and I saw his Stanford speech. It's on YouTube if you look hard enough.
I would recommend.
I think he tried to have it pulled down. Yeah, I think they tried to pull it down because he had made some.
It's out there.
Comments.
You can get it.
It's out there. I would listen, because the snide comment was interesting, because he talked about, first of all, Google being open, but then also about, Silicon Valley steals and worries about it later. He goes, hey, there was a great comment, because he goes, don't, if you want to create a TikTok on AA, you just go do it. Get the music. Hey, prompt, copy the TikTok app. And you're listening, you're going, well, can you do that? And he goes, well, if it's not popular, it doesn't really matter, because if you're stealing something that no one uses, it doesn't matter. And that was like a whoopsie moment.
Tech has always done this.
Still fantastic. Yeah,
Tech has always done this.
Yeah.
Yeah, do it first, ask for forgiveness later. When Bill Gates, when IBM came, knocked on his door and said, do you have an operating system? And Bill said, yeah. And he just went out the back and bought an operating system from some person for $50,000 and sold it for IBM and built Microsoft.
Don't hate the player, hate the game. Yeah, don't hate the player, play the game.
So, and what, by the way, Eric Schmidt said, the business of, you can tell the model to copy TikTok and just iterate it, etc. That's tongue in cheek, but there is a lot of truth there. And why is that? Because what technology has always been, initially stuff that was available for the elites comes down to the masses. And 30 years, what you said, Howard, the players have always, asked for forgiveness later. We're about to enter a phase with the next iteration of these models where the ability to iterate and do things is going to come down to the masses. We are going to be able to program things and essentially build services and run them out there without lawyers and try things and get banged up by lawyers and say, hey, you took this from here, there's so much innovation coming, but it's going to be accessible to more millions of people than ever before in terms of building new things. And again, that's something we've not seen since the PC days.
Let me throw one other out. I would say, listen, Josh from Lux Capital, who I don't know well, but I'm a fan of just the way he speaks and thinks.
Josh Wolf.
And yeah, Josh Wolf. He had a great with Logan Bartlett. I don't narrowly because of Google TV. Just so you know, like I cannot believe how many nights now I aim to go start watching Game of Thrones season 5 and end up on YouTube TV watching fucking AI videos and comedy videos. But anyways, last night rabbit hole. Wife's away for 2 weeks in Europe, so I'm just sitting, fucking catching up and falling behind. But holy shit, he went deep on AI in a very thoughtful way. And I meant to send it around to Chris Camilla, but he was saying robots in the robot space, it's going to be more about the operating system. Like it's not going to be about the actual robots, which I thought was interesting. And then he talked about AI for biology, which I thought is super interesting, right? The compounds, and as little as I know about chemistry and biology, I think that's, you can see it probably in the biotechs, starting to break out, but that's tech too, JC. Is like I think we're going to have to start thinking about where AI spreads its tech wings to, and I think
We've already been seeing it. We've been seeing it in the
Eli Lilly. We're seeing it with like revamping new drugs.
I talked to really smart people in the Midwest, and these like industrial engineering.
There doesn't exist. That doesn't exist, JC. That doesn't exist. They're flyover people. Those are all flyover people. If they were good, they would have left.
Maybe
they would live on the beach like Howard.
These
I mean,
these
if
are like
you live in America and
not
on Coronado, you're not that smart. Okay, go ahead. So you're talking
like
to these
boring,
smart people,
boring engineering machinery companies. You know what I'm saying? Like people who are in that mix, which I am not. Clearly, you are not either. Obviously, that sort of thing is below your line, which I get. But a lot of the world, listen, when we study markets, those types of stocks tend to move with markets. They tend to be leading indicators, so where's AI spilling over to in biotech? Yeah, probably that's above my pay grade, but we're definitely seeing it in the industrial space.
Yeah. Yeah.
And don't you think these logistics companies are benefiting from this? I mean, I don't know
always
anything.
Do.
But
and by the way,
they always do. They're the best company. If you really go look at the logistics and defense and aerospace, these have been sectors that if you just stuck with them inside of tech, you probably did better than any other sector. Again, it's just they don't get a lot of press, but logistics drives transportations. Logistics is tech. I mean, where would we be without? If Uber, there's no Uber without Google Maps, right? And there's no GPS. Google Maps without Keyhole and GPS, and Garmin's doing well.
And now Uber is in the Dow Jones Transportation Average.
And by the way, speaking of Uber, they just cut a deal for over 100,000 EVs, auto driving cars from BYD, company we talked about on the show.
Right, that stock's on
in China,
fire, by the way.
Okay, on BYD, Tesla is in autos is, as Chris said last week, old news. BYD is the car company to watch, and Uber signed a global deal. They can't buy the BYD cars and deploy them in the US because of bans and the 100% tariffs. But guess what? The BYD self-driving cars, Uber is going to be experimenting in dozens of countries, and they're already taking market share.
It's on my watch list. There's only 3 so this goes to the Tesla thing again. Not to knock Tesla. I'm just saying. You ask 10,000 Tesla people what the ticker symbol of the Chinese version is. It has 5,000 followers on StockTwits. It's only 25% off its all-time highs, and stays out of the press as it relates to Elon. And that Uber order is pretty interesting. So there's another angle. But listen to if someone could pull it up, the Logan Bartlett, Josh Wolf podcast. I'm a big Josh fan just because he thinks so clearly. And he seems like a good guy. I've met him a few times, but and the returns speak for themselves. at Lux Capital, which is most important. But he's talking about biology and more about the operating system, not the robots themselves, but she who controls the operating system controls the future of robotics. Go ahead, Mike.
I did a follow-up piece on robotics just a couple of days ago on home robots. So this business of operating systems is an interesting one. It's very early to figure out who's going to have that because it's
Correct.
the market, both on the consumer and the industrial side, is so fragmented. But that is a place to stick a pin on in terms of operating systems to come.
Okay, let's move on. I just had one final comment, just going back to last week, just to piggyback on this AI conversation. Chris had a comment last week about if you're going into earnings here on Nvidia, what you remember we taped last week on Wednesday, which was right before Nvidia earnings.
The results.
What you want to see, he said, what you want to see is the stock, and this goes to your point, Michael, about there not being a glut. Like there's so much demand coming down the pipeline, it's crazy. But anyway, Chris said, listen, what you want to see if you want to be involved with Nvidia is you want to see the stock get killed. You want to see it pull back 30%. That was his words. I remember vividly. And now you're looking at like, you know, I don't know, we're sitting here watching, we're like 126 to 111, you know, like we're 111.36 as I speak. So we're not down 30%, but we're down 13% or whatever. And, you know, it's off the high. And maybe there's even going to be more. I mean, this is also the first trading day of September, and everybody's out there taking Jeff Hirsch's Trader's Almanac seasonality idea, and everybody's taking JC's chart and throwing that around, talking about September. So it's really out there. So you're getting this effect. Maybe you have more weakness into October, and then you know, if you get a chance, lower. Okay, so let's move on. You get a chance with Nvidia lower. Let's move on. Now we have a segment. The best thing about doing this program live today, I think, is the fact that this is the first trading day of the month, and that JC is such a freak. Look at this picture, by the way, too. This is such a great smile.
Is that AI generated?
Is this an AI photo? It's such a nice photo. You look so
What
good.
they don't show is what's
even a
rammed
little-
up his
maybe even a
butt to
little-
make
Let me
him
tell you.
perk up
Let me
like
tell
that.
you.
He's never looked taller. He's never
Let me
looked
tell
taller.
you, that
What the hell
picture
they
was
ram up
taken in
there?
the woods. It was taken in the woods in a cabin. We got all the fellas in there. That was the day that we had that sushi, Pearlman. Remember
I
that
remember
sushi?
that.
We had the
That's
sushi chef
fantastic.
come in and like hook us up. Yeah, remember that? That was
Yeah,
dope.
and
That
like
was that
the
day. Look
Wagyu,
at that smile.
Like the crazy beef on the rock. Like you had a chef.
Lindzon, you
Yeah, it was
missed some meal.
beautiful.
This is like in the middle of COVID, and we're like all of us are like in a cabin just with like a sushi chef. It's like snow outside, so we got like the sake in the snow, keeping it nice and cold. Dude, it's epic.
So you're high on sake.
here's what I can
which think
imagine.
Makes total sense.
Bunch of flyover people in a cabin eating stale sushi.
This was on
So
the
here's
East
the
Coast.
beautiful thing.
On the
That's
East
the place
Coast.
I want to be.
Oh, eating old fish. So here's the beautiful thing. So the beautiful thing about going live on this program, first trading day of the month, is that these monthly charts that JC's been doing every month since I knew him. He looks forward to it. He texts me really excited. Hey, you know what tomorrow is? Monthly charts. He's all jazzed up about it. This
true.
is the first trading day of the month. So these charts could not be fresher. So we're just going to walk through some of the more interesting ones, comment, talk about it. You know, some of them will linger on.
Let's
some
do
of
it.
them will go right by.
Let's do it.
First one is okay, there you go. First one is the equally weighted S&P and the market cap weighted S&P. These are monthly candles going back to 2017. JC, go.
Yeah, I mean, listen, you know, let's remember why I get so excited about it. You know, it's easy for us to get lost in the noise. What did the market do today? The Nvidia, the Fed, and, you know, the Dow, and, you know, wars and interest rates. And there's always something, right? These monthly charts, you only get one data point a month. So it brings you back home, right? Like it brings you back to the primary trend. At the end of the day, this podcast is called Trends with Friends, right? The reason that we're doing that is because asset prices trend. We know that. So if you are able to identify the direction of those primary trends, you are going to have a huge advantage over those who are constantly trying to fight them, right? And so as they say, the trend is your friend with benefits. The benefits are the profits, right? So here we are, you're looking at the S&P 500 on a market cap weighted basis, traditional, making new all-time highs, but also on an equally weighted basis where you are now eliminating that top heavy, that mag 7 or whatever they call it these days. It used to be like the Fab 4, I think it used to be called, and there was
The
a FANG
fangs.
before that. You know, it was like research in motion. Like there's always some sort of silly thing. At the end of the day, it was never 6 or 7 stocks. That was never the case at all. Anybody who ever said that never bothered to go and look, right? Because if they would have seen that that was never the case at all. And this just further reiterates that it's broad strength. So if you want to just keep going, there's several points here worth making. Utilities are making new all-time highs. Highest monthly close ever for Utes. Highest monthly close ever for consumer staples. New 52-week highs for REITs. A lot of more defensive areas are making new highs. So is that, there's a defensive rotation, or is it really more of just a function of the fact that it's a bull market and those stocks go up in bull markets also, right? And as it turns out, when you go and study every bull market ever, consumer staple stocks do well. So do utilities, so do REITs, because they're stocks at the end of the day. If those
isn't it just more that those stocks go down less when the high beta stocks get hit hard?
Yeah, sometimes. By the way, from 2003 to 2007, which was a tremendous bull market, utilities were the leader. Utilities were leaders that whole time, outperformed the entire time. So if you go back to the last chart where you can see the 4 pane, you're looking at financials, industrials, materials, healthcare, all making new all-time highs. So if it was just utilities and staples and maybe REITs, that would be one thing. But it's not that at all. It's financials, it's industrials, it's materials, it's healthcare. And people are like, well, healthcare is a little defensive. Yeah, maybe. Healthcare is also the second largest weighting in the S&P 500 after technology. It's the third largest weighting in the Dow Jones Industrial Average. And that kind of changes back and forth. But basically, it's statistically top 3. In fact, United Healthcare is the largest component of the Dow Jones Industrial Average. So even healthcare that might have a more defensive tilt is still a huge weighting in the United States. Not in Canada. It's 0 in Canada. But somewhere like Denmark, it's also huge. In other areas around the world, healthcare is huge. Certainly in the United States, we can't ignore that because it has a defensive tilt. All of these areas are making new
20% of
all-time highs.
GDP.
Yeah, I'll give you another thing that's working in the market's favor. What shouldn't be working isn't working. And again, no knock on crime, because God forbid, crime should go down. Financial crime should go down. But Sam is in jail. Sam Bankman-Fried's in jail. Donald J. Trump stock is at $18. And I'm not making fun. I'm just saying that makes sense to me. And crypto's not working. And sure, Bitcoin's working because I think it's interesting, just like gold. It's a hedge. But if we look beyond Bitcoin and we look at like the memes and all the other stuff, to me, I like seeing companies underfollowed in industrial and healthcare going up, even if they're somewhat corrupt or we're not happy with it, because they're driven by profits and by people. And so I think as much as JC outlines what's working on the monthly charts, a lot of stuff that we were skeptical of for a long time isn't. And I'm okay with that because that's to me also a sign of health and clearer thinking. We're seeing that in the private markets too. As JC says, 2 things can be true. The public markets are ripping and the private markets are suffering. And that makes a lot of sense to me too, because a lot of the flyover money chased, a lot of the people JC talks to were chasing private companies instead of moving to the coast to enjoy this, to enjoy the benefit of being thievers in knocking off TikToks by talking into a prompt. But no, you're seeing this is the bifurcation of markets. You're also seeing a real implosion, like the real implosion. And I will refer back to Lux Capital. He dug into the fact that of the many hundred seed firms that were started in the last 5 to 10 years, he predicts a failure rate of 50 to 70% of those. That's not, again, that's just a prediction, but it comes from someone who's in the industry, who's been doing it for 20 years themselves. I don't look at Josh like I would look at Andreessen, who can be a cock blocker by talking to Bloomberg. Josh is just saying this quietly on a podcast, not looking for traffic, just speaking his mind, not in a bravado type of way. The same way I've been telling you guys for a while here, that this is not good, right? Like everybody's looking to the IPO markets to open up. And again, this also shows to why the markets that JC's price are doing. There's not that much supply. Nobody's getting public. So if money is going to come into the public markets, it's getting squeezed into less and less companies, which means prices go up. So a lot of this stuff isn't just based on earnings, guys. It's based on what's happening in other markets. But as JC says, the monthly charts speak the most truth. I think if you're going to look at markets, the monthly charts speak the most truth. So thank you, but keep going. Did I miss anything there?
How about the advanced decline, JC? What is that? What is that? That monthly advanced
Yeah,
decline
I
with
think
the
this is a
DV?
great one. In this case, we're looking at these are just on a daily basis. Also worth looking out. You're seeing two things. You're seeing the world's most important stock exchange, which is the New York Stock Exchange. No one's going to argue against me. That's by far and away the world's most important stock exchange, period. So much so that I couldn't even tell you what's number two. You're looking at the advanced decline line, which is a simple measure of advancers and decliners and new all-time highs. And when you look at the Dow Jones Industrial Average, I consider it the world's most important stock market index. Maybe you don't. Maybe you think it's the S&P 500. Fine. The S&P 500 is also making new all-time highs. But for me, it's a Dow Jones Industrial Average. Don't fight Papa Dow. That's how I learned it. Shout out Rafa Campora. I could still hear him yelling at me. JC, don't fight Papa Dow. Don't fight Papa Dow. You know what I used to do when I was a young kid? I used to fight Papa Dow because I thought it was so cool because institutions are benchmarked to the S&P and blah, blah, blah. What an idiot I was. I was fighting Papa Dow. Don't fight Papa Dow. That's a great lesson. And that's what this one says to me. And again, if you want to come back, if you want to look at that equally weighted technology index, I think this one is just under talked about. I mean, you're looking at on an equally weighted basis, technology is hitting new all-time highs, right? So while you're seeing some struggle out of some of these, mega cap names, maybe for a few weeks or a few months or something like that, at a key level, on an equally weighted basis, continuing to act well. Equally weighted industrials, equally weighted financials. So this is the exact opposite of just a few names. And if you want to throw up that Tesla chart, I continue to be very intrigued by this. People fail to remember that this was the fastest rate of acceleration in market capitalization and shareholder value in stock market history. What happened to this stock has never been done ever. Now, granted, more recently we've seen Nvidia do something similar, but that started at 100 billion already. It was already there. This literally started from nothing. So the fact that after such a massive rise and so much shareholder value created that we've gone nowhere for 2.5, 3 years, probably well-deserved, like very well-deserved, but it doesn't change the fact that this is one of the strongest trends in the history of the stock market. So I don't know if this is going to break out. It doesn't look like a top to me. Maybe it is. Doesn't look like it to me.
I'll give a shout out to Elon for sure.
A breakout here takes this thing to 3 trillion, 4 trillion. I mean, those are the implications. I don't know if we break out. My suspicion is we do, but that's the upside.
Yeah, I mean, let's go back and if there is a YouTube show about the early days when he was talking with his first wife of, I don't know, 70 wives. She was a flyover wife. I call her the flyover wife. Elon was fucking bankrupt. Like those first few years of Tesla when he was a public company, he was trying to fucking make payroll. So again, forgetting the nonsense that he spews today, this is still like, it's just still, anytime I think about Elon, I think about how fucking stupid California is for letting him leave and the politicians that chased him out of here. As much as I'm not an Elon fan, like what the fuck are some of our politicians doing by chasing this guy out of town? And no one's going back to, this guy was fucking bankrupt. This guy had his
98
all on the line.
December 24.
98. So
no,
again,
not just Tesla,
I would never
but also
give up on
SpaceX.
Tesla on that. Based on what I know about Elon from those stories, you can't bet against the guy. Now, even Josh Wolf, who is like very interesting story again. And again, I don't listen to these podcasts that often, but because of YouTube people, I did. So the Josh Wolf, Logan Bartlett thing, he has been as a smart guy, he has been Mr. Anti Elon Musk from an accounting perspective. But even Josh, in this podcast, was like, dude, like he is the greatest money raiser of all time. Okay, so Nvidia may be the greatest stock of all time, and Hang or whatever you pronounce his name, maybe the greatest operator, visionary of all time.
I think we could say Nvidia is the greatest stock of all time.
Okay, but
can we say that
the best money raiser of all time?
I'm
maybe
the
more
first
important
person
in the new world that we live in is Elon Musk.
Listen, I'm the first person that will tell you, yeah, it's overrated, and that's not that big of a deal. As much as I like to say that sort of thing, because usually it's true, this is the biggest stock by a long shot in the most important industry group. This is the best stock ever. This is the most important stock ever, right? Michael, am I crazy?
Child for why
in 30 years, in 30 years of technology, I have never seen a company execute up and down the tech stack the way these guys have, and they are doing it at the beginning of the biggest transformational change in software in the next versus the last 70 years. So yes, what they've executed is great. Tesla, Elon, I agree. Howard, you're totally on point. The guy almost went bankrupt. He went almost bankrupt on both his companies. December 24, 1998. You can pull up he's actually talked about it. Because just 2 days before Christmas, he got a bailout from the government for space contracts from NASA, and then also on the Tesla side.
Well,
and
what I heard, shout out to YouTube again, is like, again, I don't know how the algorithm works. This is why I'm so bullish on Netflix, YouTube, Spotify, right? I don't know how it works. Okay, I don't expect it to work. YouTube has got me down places that I never thought I'd spend time. Okay. And good, bad, the ugly, I can flip. I'm in control of this. It's my new go-to. But to hear his wife, Tallulah, or whatever her name was, who was an actress, tell the early Elon story is better than Elon telling the Elon story, because she still likes him. And that was his wife. That is the woman that had to put up with him being gone. So, going back sometimes just gives you, listen, I'm not a fan of Elon today, but I can't deny the Elon that built what he built, and that's what makes America great.
One last comment. We're going to move on, but one last comment about Tesla here. If you could put that monthly candlestick chart back up, and that is that this year it's underperforming, and everybody is, the people who are negative on the stock are really piling on. And Michael, I'm bringing this up for you. You're going to love this. Here's another a phrase for you from behavioral economics. It's called myopic loss aversion. And myopic loss aversion is this human tendency for people to look at the short term. For long-term investors, and this is where a lot of the behavior gap comes from. A lot of the behavioral mistakes that people make, a lot of the psychological mistakes that people make, is that long-term investors get caught up in the short term. So if you are a long-term investor in technology or the QQQ or Tesla, and you're being affected by this negative performance over the course of this year and this sideways action over the course of the last 3 years, especially relative to technology, you may be suffering from myopic loss aversion. Maybe just looking at the short term where really you want to be thinking about the long term. Just wanted to bring that up. So I think that's the reason that we're getting all this negativity in that stock. That's part of the reason. Okay,
yeah, I mean, recency bias for sure.
By the way, I also think part of the negativity is, guys, when I started StockTwits and FinTwits started, there was no private. I was just getting into venture capital. There was venture Twitter, but there was no seed stage Twitter. There was no the Chamas, there are no all-in podcasts, right? And what I'm saying is the negativity is, a lot of it is our audience, the financial audience is on Twitter. The influencers from Ackman to, the Chamas, to Elon, to Sam Altman, to Mark Andreessen. And what you're not reading it is the markets suck. not for Elon as a public investor, but for thousands of seed investors and thousands of LPs who are, like I just said, I opened my crypto statements. The mood shit because they're underweight stocks. FinTwit is underweight stocks. So I have this feeling that you're getting a false read on market sentiment because people are licking their wounds as venture partners and as allocators in the private markets. I can't quantify that, but based on what
we do quantify it, and based on our data, and I think it's as good as anybody else's, we're somewhere in the middle. I don't think people are pessimistic. I don't think they're optimistic either. I think they were.
But I'm saying the negativity comes from people knowing deep down that they've
I'm just not seeing that much negativity. It's just we're not seeing a lack of optimism anymore. We were seeing we were seeing a ton of optimism a couple of months ago. Now we're not seeing it at all.
No, but you don't have the exposure to private markets that I see. Michael, anything that as someone on both sides?
Sorry, I was just I just wanted to do a correction. I think I might have said 1998 as the year for Elon. That's, days before Christmas. It was 2008. So I just wanted to correct that. Sorry.
Listen, you're allowed to hallucinate. You are the hallucination. Riley? You are the AI whisperer.
What's
so
up,
you're
boys?
allowed to hallucinate once in a
Can
while.
we finish with a global thing? Because Europe keeps killing it. Everything's going right over there.
Sure.
The Euro Stock 600, German DAX. I mean, just the broad strength that we're seeing outside of the United States, particularly. I mean, outside of the US, what's the most important stock market index in the world? I would argue the German DAX. I mean, maybe the Nikkei, but that's like a whole nother animal. Like my vote, if this was like, if we were voting for the Heisman Trophy, my vote of the second most important stock market has to be Germany. And it's making new all-time highs. And by the way, if you look at the bottom there, look at the Nvidia weighting in the German DAX. It's actually 0.0%. If you can imagine that. And then look at the Euro Stock 600. This is the broadest measure of European equities. This is equivalent to the S&P 1500. So it includes small caps, mid caps, and large caps in Europe, coming out of a multi-decade base, making new all-time highs. Like, there's nothing bearish about that.
All-time highs.
Hey, JC, what is that August candle on the German DAX? Does that have any meaning to you? I mean, there's a candle where it's like closing the.
You had a lot of candles like that in technology, Nvidia, the Nikkei, just sell-offs at the beginning of the month and came all the way back and closed at the highs of the month. That candlestick that you saw in the German DAX, you saw it in a lot of areas too. And then I got one more. I got a Brazilian fintech company for you.
Nubank.
Here's the Brazilian Bovespa making new all-time highs. But the ETF that's priced in dollars, you can see the difference there. But look at the Bovespa, that's in real, making new all-time highs.
So is this like the NASDAQ? Is this like the CME or the CBOE kind of, or is this the actual?
This is the S&P 500 of Brazil, if you will. This is the index of Brazil.
So you can buy this.
You can buy the EWZ, which is the Brazil ETF.
Track this out? Does that the
but
same
it's in dollars.
Industries?
So the EWZ is priced in dollars. The Brazilian Bovespa is priced in real, right? But nevertheless, the strength in Bovespa stands out. So the next stock, this is a $70 billion Brazilian fintech company breaking out of a massive base.
Yeah,
new holdings. Huge base, absolute monster. I think this thing could double from here. We've been waiting for this breakout all year. We got it. I mean, this thing's off to the races. So, I think that it's a big world. It's I don't like to think about the world as an American. I like to think about it as an earthling. There's a lot more going on that is not what's happening in New York or in California or in Texas. And I think it's worth looking around the world because there's opportunities out there all the time.
Yeah.
And by the way, that new chart, that's in dollars. That's in US dollars. So
you buy that here in the United States.
The
don't chase
really
it,
outperforming the EWZ.
Yeah, don't chase it. But, I know where to stop there below 12. All right. So we got young man on. We got 7 minutes left. I want to keep on.
What do you got? Yeah, we got a couple other things to cover. We're still going to try to talk about football if we could get it in. But Riley's here.
Riley, hurry up.
Nobody cares about football.
We got Trends with No Friends. What's that, buddy?
I said nobody cares about football.
First, so let me tell you quickly about Trends
true.
with No Friends. This goes to StockTwits and why I'm so excited why we're all so excited about StockTwits data in our own way. this goes to AI. This goes to everything. I pitched Riley this idea. He's been running with it. This is taking the highest relative strength stocks and matching it with very low social relative strength, right? As measured by Stocktwits. And nothing's perfect, but just another way to look at data that no one else has. No, there is. Just because no one else has it doesn't mean it's good. It's just another thing that we do to try and flesh out some ideas that the public doesn't see, like a new bank. And so, Riley, what are you seeing?
Well, JC was talking about REITs making a new all-time high. And so today we have a pretty unique REIT, which is Lamar Advertising.
Oh my God, Lamar Advertising. Talk about
Lamar
old school.
Advertising. $12 billion market cap with less than 500 followers on Stocktwits. It owns approximately 30% of all the billboards in the United States. So it's the single largest billboard operator here in North America. Stock is trading at fresh all-time highs. And if you guys want to go to that next slide, we can see it's breaking out of this 30-month base. So absolutely beautiful here. If the stock is above 124, it looks like the path of least resistance is higher. We can put a stop below 120. But being a REIT, Lamar also pays a 4% dividend. So I don't know if this qualifies in JC's Young Aristocrats list, but it's kind of a little cherry on top to get that.
The Young
dividend.
Aristocrats are going to be stocks that have raised their dividends for 5 consecutive years, between 5 and 9 consecutive years, especially.
Yeah,
I don't.
I think
know.
this is getting close. Then I think this is getting close. I think it's been
And
about 2
again,
years.
we start this will probably be the most popular segment or its own show at some time as Stocktwits finds more time. Think about where we are with stuff like this, right? JC can go top down on monthly candlesticks, but guys like Riley who are using Stocktwits, which is free, can run these spreads. What is Lamar really saying? First of all, good point on a REIT. You can earn T-bill type rates with a stock that's like underfollowed and pretty much tied to the global economy in many ways. And I don't know much about Lamar. Now with AI, we could go to FinChat in 2 seconds and do all the research we ever needed to do on that stock, or go to Koifin and pull up everything that you need. You can go to Stocktwits to get the sentiment, maybe a couple quirky insights, but really you can go to finchat.io and go run unbelievable research and go through all the quarterlies, 10Ks, break out kind of how their sales are broken down, do all the technicals. So again, I think this is where the future is, right? You can index, but I think we're entering a post-index world where you have to look beyond the 7 companies. There's this Eli Lilly and Nvidia are perfect examples of why you should index, because there's no way you would have held them or found them, and they've become so significant to the portfolio. You wouldn't have. Nvidia is what, 24% of the SMH holder, and probably
19
over 10, and probably 10% of the QQQs. So
It's
there's
19%
very few.
of the QQQ. Sorry,
Okay,
it's
so
7.5%
very few
of the
humans would have
QQQs.
held that, and you look at Eli Lilly. Very few humans would have held that. So no one should tell me I'm not Mr. Index, but I am a sold on indexes. But every human with FinChat, Koifin, Stocktwits, JC, Trends with Friends, Michael Parekh, YouTube podcasts should be trying should be with these free tools and capitalism and the markets the way we see them, and access to CEOs and education and behavior coaches, to not do this as a crime. To not do what Riley is doing is the crime. And stock picking was a crime in a way. Many people thought it. Now indexing is something everybody should do, but not stock picking when you can do this type of research is a crime. Especially Michael, coming out of Goldman back in the day. You tell me. Like, are we way off here?
Totally. There's, the pendulum always swings too much either way. Indexing is awesome, but the kind of gaps that Riley's talking about, this great idea, the spread between companies that are doing awesome, but they're getting crowded out on attention, is a key piece to focus on. And very soon there'll be ETFs for this, there'll be algos for this, all of that, because every trend is actionable, especially in global markets and big indices. that we're talking about, whether it's the U.S. indices, it's JC talked about. I love the German chart, etc., and Asia. We don't focus on Asia as we probably should over the next 10 years, but that's another obvious spot.
That's the
With
one JC was going to
inefficiency.
go with. Like, you can't put Germany above Asia. Now, Germany's working because of what
Why not?
you have said.
Why not?
Industrials and financials are doing better than tech.
Why
No,
can't you
you're
put Germany
right,
in front
but
of Asia?
there's. I just don't think Germany is the market, but that's another
Where in
argument.
Asia is more important than Germany?
China. Even if it's fake, it's more important.
But it's so the problem with Asia is it's again it's like there's so many of them, right? It's a cluster. Indonesia,
Look at the
Malaysia,
look at the
Vietnam.
performance of Chinese equities and look at the performance of U.S. equities and tell me they're related. Then look at the performance of German equities and look at the U.S. equities and you'll see how they're related. They're their
I get
own
what you're
animal.
saying. It doesn't mean it's most important, but one
wanna
is
go
Most
back
working.
important
down
for
to earth.
investors,
I
Howard.
just want to
All
go
right,
back
you know
down
what?
to earth.
Fuck you, JC. Fuck this.
484
This whole
followers on
fucking
stock
thing's out of
Parets.
order.
This stock is making
Fuck it, we'll
all-time
do it
highs.
live.
There's nothing more boring, seemingly, than outdoor billboards. But here's the secret about that:
I love
outdoor
outdoor
billboards are
billboards.
really not boring. They're
I love them.
actually incredibly
We should do a trends with
interesting.
friends outside billboard.
And I will tell you this: that
Fuck
by the end
flyover.
of next year, you're going to be hearing about this Lamar and how they're using AI and electronic boarding to know who is driving in a certain area at a certain time of day. What
They have inventory. They
demographic.
have real
I
estate.
have
be
been
like,
focusing
okay,
on electronic
it's
billboards
old
for 20 years.
people who are
Love it.
overweight. Here's your Ozempic sign. And it's like, so they're going to be using AI too. So really, it's
Yes,
not
they
so
have
boring.
data. They have inventory. They are good point. Good point.
Okay, so
Very good point.
who are your football picks for this year? We just had like first week of the year for college football. This is college. This is pro. It doesn't matter. Thursday night, the hated Chiefs of Kansas City play the revered Ravens of Baltimore. I'm obviously going with the Ravens for my big pick. It's Lamar and Derrick Henry in the backfield. That's like insanity.
I think a bigger
Young
idea is like
offensive line.
which team's
but a
most likely to
great,
have a wide
great
receiver
backfield.
shot.
Go ahead. What is that?
I mean,
What's
what
that?
city
What's that?
and what flyover state will which coast state will have someone a wide receiver shot this week? I mean, so all right. So on my pick,
Ever
this
the
noon?
cynic, Howard Lindzon is looking to bet
I
on who
like-
is going to get shot.
yeah, I like this week Cowboys over Browns. That's my one pick.
JC,
Oh, you want me to pick the
you're
Super Bowl
Dolphins
winner?
guy,
You want me to
going
pick the
way
Super
back.
Bowl
Listen,
winner?
I listen, the Twitter algo is real. I liked like a couple of tweets about like the Gators, how bad they are and how FSU can't win a game. And now my entire Twitter feed is just hatred towards Florida State and Florida, which I thought that I would appreciate, but it's a bit much. It's a lot. There's other things, but it is
That
great
hat's
watching
great.
Florida and Florida State do terrible. The Miami Hurricanes look great. The national championship game this year will be in Atlanta. I will be there watching the Canes. And I got to tell you, the Dolphins got a good shot. The Super Bowl is in New Orleans this year. It should be in New Orleans every year. I stand by that. I will die on that hill. And I like the Canes and the Dolphins. I know I'm a homer. But like for real this year, though. Like for real.
And Parekh, I didn't know.
Steelers.
I always loved you. Now I have to rethink that. You're a Steelers fan.
Ooh.
He looks a little bit
Pennsylvania
like
is
Mean
my-
Joe Green meets Franco Harris. He's a little bit like a combo, right? He's a little
My
bit of
adopted
a
home
fucking-
state, flyover country, adopted home state.
So
I'm
who does
sorry.
the AI whisperer like? Who do you like?
Steelers?
He's going with the Steelers. I'm
Steelers.
I'm embarrassed to say this because I'm no longer a Cowboy fan. I was a Roger Staubach era, a Danny White Cowboy fan. They're an atrocity to me. So I don't have a favorite team in the NFL, and I am. I'm friends with a few Cardinals, so I'm just a sucker. I won't go to a game, but I'm a sucker for the Arizona Cardinals. Shout out to Kelvin Beachum, a buddy of mine who's suiting up for I think his like 14th season, lineman for. We'll get him on the show here, an investor friend of mine, but. Shout out to Kelvin. So I'm loyal to people where I know in the league, so I got to go Cardinals, even though they suck ass. All right. So we know where JC is. Riley, who do you like?
I mean, I really don't care, but if I had to root for a team, it'll be the Broncos. I'm a hometown
right.
kid.
All right,
Riley's
that's
like,
shitty.
get outside
Everything about
on a
Denver
Sunday
sucks. That
afternoon and
fucking
blow off the
airport.
NFL, which
Let
I
me just tell you
appreciate.
something about Denver. They got to.
Denver sucks, but the rest of the state is beautiful.
First of all,
Fly
Denver
into
doesn't
Aspen.
suck, and
Don't
the
fly
rest of
into
the state
Denver.
is beautiful.
I'm
The rest
still
of the
looking for my bag at Denver Airport.
That airport needs to be. Netanyahu needs to do something to that airport, is what I say.
Just fly into Eagle and stop being so cheap, Lindzon. Just
Fly
go
into
straight to
Aspen.
Vail, bro. Come on.
The fly into
Go to
Aspen is
Denver.
beautiful.
We're out of
Next
here, you
week.
guys. Everybody have a great week. Adios.
All right, boys. See, I'll be in
Awesome.
Aspen next week. JC, I owe you
Oh,
a call in
wow.
a few minutes. I'll give you about.